Real estate term of the day. Tax Relief Act. This was done back in 1997. This is where if you have a primary residence that is your homestead and you've been living there 2 out of the last 5, so it doesn't even have to be consecutive. It just has to be 2 years out of the last 5. When you sell that property, your capital gains, you're going to have a tax relief up to $250,000 if you're single or if you've married and filed individual. If you file jointly, then it's $500,000. Do note that it's based on the original purchase price plus your closing costs plus your improvements minus what you sold it for. A lot of customers that I speak to that tell me I don't owe anything on my house. My house is worth $750,000. Do I have to pay taxes on $250,000, which is the plus on the $500? No, because we have to go back to when you purchased it. How much money have you put into the house? What was your closing cost? And then whatever that bottom number is, you subtract that from your sale, from your proceeds, and whatever is left is your tax break. If you're above that, then you're going to have to pay the difference in capital gains tax. But most people should be below that, and you don't have to pay any taxes. You still have to report it to IRS, so don't forget that. I'm sure your CPA can help you out a lot more with that kind of information. For more tips and tricks, please visit my website. Till next time.